Go.
Streaming from South Africa to the world. This is the Stonks Go Moon Podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon Podcast. Markets just absorbed a monster shock. $2.7 trillion wiped out on the S&P 500, crypto falling in sympathy, and Bitcoin hitting a 7-month low. Retail panic is spiking, but the internal plumbing of the derivatives market is telling a much more nuanced story. Today's guest lives inside the market structure. As the COO of SynFutures, one of the top derivative dexes on Base and one of the fastest growing venues for permissionless perpetuals, she has a direct line into liquidity behavior, leverage flows, and how builders and institutions are positioning during chaos. When the headlines scream fear, she watches the flows. Ladies and gentlemen, my guest today, Wenny Cai. Welcome to the pod.
Thanks for having me.
My word, that was a mouthful. I'm glad I got through it in one take. As we are recording today, the 1st of December, Bitcoin got hammered again in early morning trade. You're based in Asia, so you, for those that are waking up or about to wake up in a couple of hours in America, they're in for a shock again. That's assuming they're not on their crypto, on their phones watching their crypto portfolio, and I haven't slept in the last 48 hours.
It's good news that we're all in this together. So I think that's the a bit of the silver lining, and we're here to stay. So yeah.
I love it. We're all in it together. I love it. Okay, so from a derivative infrastructure point where you're sitting, what actually happened beneath the surface? Just unpack it out for us, like it's sort of in a macro level.
Yeah, I think on the surface, of course, it's about the inflation fears. It's about the Fed not cutting the rates. It's about over optimism about delivery of AI utilities. But underneath, I think everybody understands that it's really about the deleveraging, the leverage that's unwinding, and it's unwinding very, very fast. I think the shock started in traditional markets, but in crypto derivative side of things, it's an amplifier. Of course, when it's retail focused, it's going to be we see a lot of long position liquidations, and then of course once that liquidated, introduce more selling, which introduce more liquidation. So of course the good news is until now, I think until this morning, I saw there's some hack news, but there's not one news about certain exchanges cannot handle the flow. I think it just shows how connected the network is, but good news is it's still holding. Yeah.
I haven't seen any major liquidations of hedge funds as well.
Not really, not this morning. If you're suggesting, that's what happened this morning.
Fingers crossed. But saw the retail players panicking, sort of, but the larger players sort of behaved differently. What do they know that the retail does not?
Sorry, the question is what?
What does the larger players know that retail might not know?
Well, of course, if you look at the open interest, right? That's one of the biggest indicator of how the overall perpetual market is, going upward or going downwards. So the perpetual, if the OI shrank dramatically, that means people are getting out of their position voluntarily, or a lot of the cases is forced. So that also at the same time, if you look at the funding rates, it's not going insanely negative, compared to a panic. So that hence a lot of these positions are forced out that belong to retails, and the more sophisticated players like market makers who is actually on the other side still hedging. So I think that's
so not really a panic sell-off, more like an orderly sell-off because of structural things that happened.
Yeah, exactly. I think that's what we are seeing right now.
Okay.
Yeah. The fear is very concentrated. It's concentrated with the retails. Yeah.
Interesting. Let's talk a bit about Bitcoin. Obviously, we're coming off all-time highs and now hit a new 7-month low again, $4,000. I think it's trading at $88,000 this morning. Do you think it's more structural de-risking, or do you think it's more sort of derivatives that caused this to happen? Why is it moving the way that it's moving?
Yeah, I think it's a bit of both.
Both.
Of course, the rates staying very high and staying higher and longer, that hurts all types of risk assets, and crypto is one of those. But of course, if you look at the speed and depth of the drop,
Yes.
it's definitely correlated to derivatives because of the leverage. As mentioned, once this happens, it's a domino effect, right?
Yes.
So in a way, I think this is the market clearing out the excessive leverage and kind of resetting the board.
It's like a coiled spring, right? The bigger the contraction, the bigger the upside is going to be. Is that a fair assessment? Assessment. I don't want to not predict price, but we could see this as a sort of the spring coiling.
Yeah, I do think so. And I do have some very sophisticated trader friends say they already started their bidding around, 70, 75. Although, I mean, I think that's still below a lot of people's, retail holders' expectation. But I think that means like the market is really maturing overall, with people already have an indicative price that they know when the market is going to bounce back.
Okay, and the base infrastructure, how was that affected? Are we like, is it plain sailing, clear sailing? How's it holding up?
Well, I think Base is creating a lot of creating. First thing is they're probably gonna have the network token, which drives a lot of
Yes,
traction, a lot of
yes,
interest, a lot of topic. But at the same time, it's another layer two, which of course all the users are a flight to safety, right? They focus their trading behaviors on the majors instead of altcoins. So
yes,
unfortunately, we do see some altcoin markets are no longer functional, like on the perp side,
yes,
and because nobody is providing liquidity, right? So, but we do see more people are looking into a smarter strategy to have like a hedging position, as in we always have some stable coins working with us. They're like an on-chain Ethena, which
yes,
they always have a leg at SynFutures, another leg at Airdrop, Uniswap. But we're seeing more people are converting from directional bets into some safer delta neutral strategies. Yeah, that's base, and that's
yes,
actually overall the whole
yes,
industry.
yes.
Yeah.
When is alt season? Where did we miss it? Altcoin season. When did we miss it? Where did it? We just skipped it. What happened? Like we were supposed to have an
Um, you know,
altcoin season and it just never happened.
yeah, I think it just I would say the peak of the altcoin season was if you remember, there's a few months that everybody's talking about AI agent. That's how we
Yes,
felt about now. Yes, these are very cute cartoon images, and we don't really, by the end of the day, we don't really know what they can do for us, if they can actually take any, because agents
yes,
are supposed to be execution for you instead of just
yes,
an AI workflow, right?
yes.
So I never did the analysis of how many of those actually delivered, but
Okay,
unfortunately, I think that phase is over. But by
okay.
all means, other than the few majors, all the other tokens are altcoins, right? Like AF token is also like our own
Yes,
government token, is also altcoin.
yes.
We do think. But with fundamentals, we have more long-term goals versus a short term of spike and dump type of play. Yeah.
Do you think AI agents, are you buying into the hype, or is it sort of a let's see what happens? Because I've yet to see sort of the I saw the theoretical behind it, but I haven't seen it work in practice to the level that people sort of are hyping it up to be.
Yeah, I mean, there was a project. So they basically using different
Yes.
LLMs as the infras, and offering people the performance of the same based on the same prompt and how the performance of the actual strategy they executed,
Mm-hmm.
and that was the last project, I feel like, okay, this is probably the future of AI trading, where people have visibility and they can compare among different LLMs versus, you just do whatever they tell you, which means no, safe net or benchmark at a point. But to be honest, that narrative is very, very weak right now, together with many other narratives. But,
okay, what's next? What do you see coming down the pipeline in the sort of the next quarter? Because now the market needs something, right? It's always like, cool, what now? Because if there isn't something, I think we're in for a bit of hurt.
Yeah, that's true. I do think the next 3 to 6 months is, of course, everybody's looking at how the Federal Reserve decides on the if there's going to be an interest cut, and also how the long term, the Treasury yields is going to behave. Is going up further? That will mean that more liquidity will be sucked out of all types of risk assets, including crypto. But then if actually stabilized or starting dialing down, that means people will see that as a signal that, it's time to, build and everything. But I do remember this in last cycle, 2021, 2022, there was a time that everybody was doing tokenized T-bill. That was because the T-bill offers a 5% yield that's risk-free. People consider it risk-free. Today, I don't know if that's the case anymore, but back then, risk-free, and it's a really good go-to strategies when it's a bear market. So now I do see more and more RWAs are ramping up again. By all means, we are actually SynFutures is also developing our own RWA products. But then it's going to be more liquid assets versus low liquid assets. Yeah.
Is that tied to the token that you guys recently launched on Binance and Upbit?
Yeah. So thanks for bringing that up.
Shout out tokens.
Yes. So that's our governance token F. I recently got listed on Upbit and Binance. And especially for Upbit, it's definitely monumental for us because it really opens up the whole Korean retail markets to the project. Because previously, the Korean government has been relatively cautious on derivative projects, DeFi derivatives. But after we had like a lot of in-depth introduction of how the product works. So basically, they believe that we are here to stay. We're going to build into like a stronger infrastructure. So I think branding-wise, definitely better, and more inquiries from interested market makers, traders, liquidity providers, conversations ongoing. But the market now is quite weak in terms of DeFi liquidity provisioning. A lot of the hack. The values exploded, a lot of hidden leverages. So that's something we definitely want to tackle. So we will have some major upgrade in the upcoming, Q1 2026. Yeah.
In terms of? Upgrade in terms of?
In terms of we are upgrading into our own infrastructure. We don't want to call it a layer 1, layer 2. It doesn't really matter in that way.
Let's not put a label on it. Let's not put a label on it.
Yeah, there's no label to it, but it's going to be light and fast. And we are we now already deployed it in testnet, and it all makes us feel very hopeful about finally connecting the TradFi and DeFi liquidity together. And this will come together with the RWA, tokenized stocks product that we're mentioning. Yeah.
I mean, I guess building during tough times is sort of that's when you need to build, right? It's when everything is down and red, and because when it turns, then you are in the pound seats, then you are in the pole position.
So actually, for me personally, I prefer bear market almost because this is the time you can actually build. In the bull market, everybody makes money, to be honest. You just sit there making one bet and wait for the harvest to come. And there are just so many different narratives every single day, and your job is not like, as a builder, it's very hectic to begin with, and sometimes it hurts the morale because sometimes you build it for like a good month or 2 months, and then when you actually are ready to launch, it's no longer a narrative. It's past like 2 months ago. So I think bear market is really good for building, resetting, improving. So the team is actually enjoying it.
I can imagine. On that positive note, I'm gonna love you and leave you. And thank you so much for joining me today on the pod for this short but very insightful macro conversation about the markets and Bitcoin. If the listeners want to go and connect with you and SynFutures, where can they find you guys?
They can find us on Twitter. I'm on Twitter as well. And, once you go to the website, there's a doc site where there's a list of the people that's important on the team, the core contributors, and then they can reach out to them on TG if they want to.
Awesome. Awesome. We'll put all the links in the comments. Thank you so much for joining me today. And to our listeners, peace, love, and prosperity. Okay, till the next one. Cheers.
Circles in my head around the things I left unsaid. Every instant screaming loud, but I keep folding to the crowd. I wear the guilt like someone's mark, a tether pulling in the dark. You say forgiveness sets me free, but chains feel safer honestly. I'm tired of begging for escape. Just tell me how to shed this weight. We're animals of grace, crawling back to where we broke, trying not to face every word we never spoke. We're out of grace, learning how to heal the blame. If mercy has a place, teach me how to say your name. Teach me how to say your name. has a place, let it come.